Coinbase has partnered up with Better Homes and Finance Holding Company to help crypto owners to be able to put down your down payment on a house. This is interesting. Typically, with a mortgage, you have to put some money down, cash. But now, this arrangement with Coinbase, you can now borrow in cash against your crypto. So you're not having to liquidate, you're not having to have capital gains. You're just borrowing against it to make your down payment. Whereas in the past, you would have sold the crypto and made the down payment. This way, your assets can continue to grow as you start to make your down payment. Now, ultimately, you're going to have two loans. You're going to have the primary mortgage, plus you're going to have this Coinbase loan for the down payment, which is a highly leveraged position, I would say. You're highly exposed if the market goes down and your crypto holdings end up getting liquidated, then you would have a capital gains event on top of not having as much money as you did before because prices went down. It could be a real nasty shot if you have a massive drop in the value of your assets. I've heard, Bitcoin's going to hit 150, 220 before the end of the year. I've heard these numbers, but I'm looking at the charts and, people are saying, well, if it goes any lower, it's going down to 50. And the worst people are saying it might go down to 15. So who knows what's going to happen? But you don't want to get yourself overly leveraged on crypto-based loans that you can't withstand a downturn in the market. Crypto, it's a speculative investment. It's going to go way up over long term, but in the short term, it's extremely volatile. When you do a crypto loan, we'll say a Bitcoin loan, if you want to borrow 100,000, you need to put down typically either 200, maybe 300,000 in cryptocurrencies as collateral. Now, that'd be at the current time. So if you had put 200,000 worth of crypto down to secure a loan of $100,000 of, say, a stable coin, then you can withstand a 50% drop in the value of Bitcoin before you would have the risk of liquidation. So let's talk about it. You got a loan, you have your crypto as collateral, and over time, you're paying back that loan. Now, if all of a sudden the prices of your crypto go down to the point where you hit a liquidation event where the lender is going to sell your crypto to pay off the loan automatically on you, then a couple things are happening. First of all, liquidation is a capital gains tax event, plus you lose your crypto. And not only do you have the capital gains event for selling crypto, that value of that capital gains event is treated as the value of your loan at the time. So it can be very hard. How much was the price that it was sold at? The price you sold at is the current value of the loan. All right, say you had borrowed 100,000 and now you've only owed 96,000 because you've paid 4,000 back. Then all of a sudden your crypto drops, they get sold. The value of those cryptos that were liquidated, the proceed price is going to be whatever the current value of the loan is. So that's all capital gains tax on top of the pain of not having the crypto. So it can be very harsh because the capital gains tax is going to be another, depending upon where you live and state taxes, this is something in the neighborhood of maybe 20 to 30% for some people, maybe more. The logic of a loan goes this way. The notion is that your asset, let's say Bitcoin, is going to go up on average 15% a year. But if you're only paying, say, 6% on the interest on that loan, you have 6% cost, but 15% gain. You have a 9% growth out of that. It's actually very good. Unless, of course, it doesn't go up 15%. If it goes down, say it drops 10%, you add that 10% on top of the 6% you're paying for the loan, that's a 16% drop you're experiencing in a sense. When you borrow, you're creating leverage. Leverage can be good and leverage can be bad. My hope for people, if you did this, is you'd want to pay that loan off quickly. It's not something that you want to leave hanging out there and keeping your asset portfolio at risk. Very interesting, very creative. I applaud Coinbase for thinking of this.